It's Wednesday, March 4th. Here's what's moving upstream this morning. No price feed this morning, but you don't need a ticker to read this market. Crude is surging on back-to-back days of escalation in the Gulf. Goldman and JP Morgan have both revised supply loss estimates upward, and the direction of travel is unmistakably higher. A drone debris strike ignited a major fire at Fujairah, the UAE's key oil hub on the Gulf of Oman, disrupting terminal operations at the very facility built to bypass Hormuz. Iran's IRGC declared complete control over the Strait of Hormuz overnight, with fresh vessel attacks reported, as strait traffic has nearly halted, and Russian Urals barrels are moving at deep discounts even as the global benchmark rallies. A sanctioned Russian LNG tanker exploded in the Mediterranean early Tuesday, a first-of-its-kind incident, while Asian LNG spot prices hit a 3-year high and Norway confirmed its gas output is already maxed out. Goldman Sachs lifted its Q2 Brent forecast by $10, citing the Hormuz near halt and rapid drawdowns on OECD inventories, and Saudi storage data shows the kingdom has production with nowhere to go. Indian refiner MRPL declared force majeure on all March and April gasoline export cargoes, a sign the Hormuz crisis is now buckling refinery-level supply chains across Asia. NextDecade said commissioning for the first train at Rio Grande LNG could begin by year-end, and with Qatar offline and European buyers scrambling, U.S. LNG capacity additions are suddenly front and center for energy security. Flowco closed a $200 million acquisition of Valiant Artificial Lift Solutions, expanding its Permian footprint, and Equinor struck a deal with Newfoundland to advance the Bay du Nord deepwater project toward a 2027 sanction. The one to watch, the Fujairah strike. Until Tuesday, the working assumption was that traders and producers could partially route around the Hormuz closure using UAE East Coast infrastructure, a $30 billion system built for exactly that purpose. That assumption is now gone. Iranian targeting doctrine appears to cover the full spectrum of Gulf export infrastructure, and with Saudi storage filling, Iraqi volumes shuttered, and Qatar's LNG offline, a 110 Brent scenario is no longer a tail risk. Traders are running it as a base case this morning. Full analysis at AFE Leaks.substack.com. Subscribe for the daily briefing.